Nvidia would have been a decent investment a year ago. An amazing investment 5 years ago. And a life-changing investment 25 years ago. Now, Nvidia may be a great investment now, but as you can see, it's a clear case of diminishing returns. Nvidia is already one of the largest companies in the world. You're not going to 100 times your money on a stock like this, but you can on the next Nvidia. Today, I want to reintroduce to you guys the next Nvidia. If you guys are new, this might be your first time hearing it. Now, it's not quite the same thing, but it is an AI picks and shovels play. So I'll get into that. Essentially, one thing I want to show first though is if you get something like Nvidia, you're looking at a PE of about 40 with bottom line growth 80% and top line 78%. Now it would be a bit better to use forward numbers than these ones, but I'm just giving you a general gist of the numbers so I can compare them. So I first introduced this company on December 27th, reintroduced it on January 2nd, and then once again on March 28th. Since then, it's up from all of those videos, but just barely. It's a pretty similar price that I introduced them all at, despite quite a wild ride, I'd say. But essentially, when I first introduced this, we had barely any top line growth. Like, I'm talking 3% year over year. And now when you think of that puny growth, you might be thinking, well, this isn't no Nvidia. It makes sense why it was cheap back then. Many bad things. But like I mentioned then, and I'll re-mention now, is essentially they have 3 verticals. Power systems is their driving vertical, while the industrial and transportation are on the decline. So even though their revenue barely grew in 2024, their net income grew massively. It was kind of a masked growth effect. If you look at App, they went on a killer run. Now you can see their growth clear as day, but before they had the same thing. Their advertising was growing while their older vertical was dying. The masked growth effect that make investors not trust the company and miss out. Now, despite that being undone as the power systems is booming, industrial still in decline, transportation's basically flattened out. For some reason, the stock isn't up that much. Now, there could be various reasons, and I'll speak a little bit on them later, but I'll introduce the numbers now. So instead of 2% growth, we're now looking at 42% year-over-year growth on the top line. Margin expansion, same as it was earlier. They keep expanding that margin as power systems is a higher margin thing and it's driving the growth. And then insane net income increase. This is over double of Nvidia's, and not as good top line growth, but Nvidia had a PE of 40. This has a PE of less than 9. If any of you guys can find a company growing their top line over 40%, bottom line over 150%, and with a PE less than 9, please share the stock with me. I'd love to take a look at it. But yeah, I don't have much else to say other than this is a very cheap company. A couple risks I want to highlight is their supply chain is largely in China. So that being said, there could be issues with that and the huge tariffs. Now, given companies like Meta keep increasing their capex guide, I would assume that they are able to pass on most of the costs and that their business will be okay. And ultimately, I don't think the tariffs are that sustainable. I do think they're going to get rolled back at least a decent amount. And given that they're so high now, even if they're reduced to say 50%, I mean, the worst is really priced in. So even a reduction like that probably sends this stock flying. So I think really you're paying for hyper growth at the price of a zero growth company, and the risks are, I believe they're fully priced in and it can only get better. So I don't have much else to say other than that I really like this company.